Mr. Adegbenga Alamu boasts of an extensive record of 23 years of proficiency in accounting, corporate and mortgage banking, as well as real estate financing. His exceptional skills in relationship management and leadership enable him to provide strategic guidance for business units. He is a distinguished accountancy graduate. He is a distinguished accountancy graduate, a chartered accountant, and holds a Master of Business Administration in Finance. He commenced this profession as an accountant in 1999 and has since worked for reputable commercial and mortgage banks such as Stanbic IBTC, First Trust, and Home-Based Mortgage for a total of 21 years. For mortgage options and home ownership financing, we now warmly receive the Chief Operation Officer at Quick Shelter Nigeria, Mr. Adegbenga Alamu.
Thank you. So, I'll just take a little to the slide, then we share things that can benefit us. By the grace of God, all my life has been banking and real estate. Thank you very much. Thank you. Okay, while waiting for the slide, we discover presently, based on where I work with a property and mortgage digital platform. A report came out last month that 85% of Nigerian graduates do not have digital skill. When I saw the report, I said it's not possible. I took time to read the report and I discovered that what people know is Facebook, Instagram, Microsoft. That's all. And some things can never add value to you. So this afternoon, I want to encourage us, as creators that are here, that we need to learn a lot of things, especially in the real estate value chain. Is my slide ready? Okay, while waiting for the slide, the real estate market, in terms of financing, has gone through different transformations. In Nigeria, for instance, the Nigeria Housing Program that the CBN and the World Bank put together has addressed some issues when it comes to financing acquisition of property. Number one, the issue of liquidity has been resolved through the establishment of Nigeria Mortgage Refinance Company to provide secondary liquidity for people that want to refinance mortgages. This is the way it works. The mortgage lenders are expected to originate and underwrite mortgages. After mortgages have been underwritten and the mortgages are seasoned for a period of 6 months, seasoning means that no default in payment of principal and interest. After that, the mortgage is refinanced by Nigeria Mortgage Refinance Company. And what's the benefit of refinancing? The benefit is very simple. You move from floating interest rate to a fixed interest rate throughout the remaining tenure of the mortgage. So if you are taking a mortgage for 10 years, which is 120 months, after month 6, the mortgage is sold to the Nigeria Mortgage Finance Company and the interest rate becomes fixed throughout the life of the mortgage. But that does not mean that if the market is favorable and rates come down from the market, you can go back and do another source of refinancing, or you do what we call equity release and get money paid down and do another transaction. Aside from that, under the Nigeria Finance Asset Program, we also realize that people have difficulty in putting down payment that is called equity contribution for completed properties. So under the Nigeria Finance Asset Program, they went ahead to do another thing we call Nigeria Mortgage Guarantee Company. What Nigeria Mortgage Guarantee Company does is very simple. If what we're expected to provide as equity for a property is 20%, let's say the property is 10 million naira, you're expected to provide 2 million naira, and mortgage will come in for 8 million naira so that property is paid for. But because in Nigeria, don't forget that investment, consumption, and savings equal your salary. But in Nigeria, in some cases, you have negative consumption because you have to even borrow in order to consume at the end of the day. And people want to buy property. So under the program, they set up Nigeria Mortgage Guarantee Company. It's like an insurance underwriter. What do you need to do? As somebody that wants to take a mortgage, what you have is 500,000 naira. So there's a difference of 1.5 million. So what you need to do is very simple. You get a guarantee for 1.5 million naira. You put down your own 500,000 naira. So the mortgage is financed, provided you have capacity to service the mortgage. After 3 or 4 years, your loan to value ratio will have gone back to 80%. At that time, you stop paying the insurance premium. Also, under the Nigeria Mortgage Finance Program of the CBN and World Bank, they also realize that mortgage underwriters, especially the mortgage banks, they don't have the liquidity to originate mortgages. So they set up what we call Nigeria MWFM, Mortgage Warehousing Funding Limited. What Mortgage Funding Limited does is this. When mortgages are to be underwritten, let's say for Terra property, for instance, they have customers like 20 or 100 that want to buy into their properties. So what they do is that the mortgage banks will approach Mortgage Warehousing Funding Limited. They will provide the liquidity to help the mortgage banks. And when those things are done, at the end of the day, they are sold to Nigeria Mortgage Refinance Company. That is that. Recently, the Pension Commission of Nigeria also discovered that for RSA holders that are contributing to pension and they are getting a return of between 4 to 6% on their pension, that this can no longer work because people realize that the value of a property today, and by the time you are retiring, you will discover that that money you have in pension is just ordinary paper because inflation will have beaten it up and down. And by the time you are retiring, the money you've worked for, you've saved, probably, let's say you have 100 million. Based on my experience, I've seen people that have up to 200 million in their pension account, processing mortgages for. But at the end of the day, in 10 years' time, that 200 million in their pension account may worth probably maybe 50 million naira at the end of the day. So the Pension Commission says that they will allow you to utilize 25% of your pension to support equity to buy a property. Let me explain it clearly. What are we talking about? A property is 10 million naira, and you have approached a mortgage bank, and the mortgage bank said you have to bring 2 million naira, which is 20%. They will finance the balance of 80%. And you check your pension account. What you have in your pension account is 10 million naira. That means that from your retirement savings account, you can access 2.5 million naira. But because the lender says that what it requires is just 20%, which is 2 million. So you can access 2 million naira from your pension account. The mortgage bank will give you 8 million, making 10 million. So what that means is that you can actually pay for that property without down payment from your pocket, because your retirement savings account will give you 2 million, the mortgage bank will give you another 2 million. You ask me a question, I'm talking about 10 million property. I'm just using that as an example. I know of people that have been able to get their data. I saw people having 200 to 50 million in their pension balance. 25% of 200 million is 50 million. So for somebody like that, I've seen a customer. The property was, if I remember, maybe 60 million naira. And the customer said, I don't want to take mortgage, but I want to access my pension. I said, by law, you must take mortgage to access pension. So I advise the customer, this is what you do. Bring all your cash. We are going to take mortgage arrange mortgage for you. She said, how much? I said, let's arrange mortgage of 6 million for you. She said, how soon can I liquidate the mortgage? I said, 30 days. After we book it, you can liquidate. I computed the interest. It was 25,000 naira. So I said the cost of accessing your pension is 25,000 naira. She said, no, I don't want debt. I said, debt is cheaper. Debt is the best. If you don't take debt, you have access to almost 14 million, 25% of your pension. But you must take that mortgage. You can take it today. After 1 month, you can liquidate it. There's no penalty about it. So we need to understand it. And by my last computation, I think as at end of August, we had the total asset under management was 17 trillion naira. And that means that about 4.25 trillion naira is available to be unlocked into the market for people to support their equity. So most people don't really know this. And if you are a rector, you don't have this understanding, you are going to have issues concluding this. It's not about cash, cash, cash. The other thing I want to say about financing, I discovered that when we conclude a transaction, you don't leave the customer alone. And I've come to realize that when I underwrite a mortgage for a customer, I don't leave the customer alone. You know what I do? I begin to look at the market. Watching the market, if I realize that rates are coming down in the market, we sit down with the customer. If we pay down on this loan by doing equity release, this is the cost of documentation, this is the cost of perfection. This is the reduction in interest rate. You can take a decision on it so that you pay your interest rate is further reduced on the transaction you want to do. So after giving that background, what are the various financing options that are available to a rector in order to conclude transaction? Number one is the traditional mortgage, which are sell property, that's where you are going there. So that when they are doing conversation about oil and gas, upstream, downstream, you can talk about it. Because people want to know that you are interested in the business that they are doing. So we must keep on reading. So back to construction mortgage. Under construction mortgage, you don't say because property is 60 million and what is available cash is 30 million. You have the customer to pay with. No. The customer should not pay with. That's what we call construction mortgage. How does it work? Very simple. Construction mortgage, they will assess you. What can you afford for repayment? Once you assess your equity that you have, drop it in the account. They know the offer letter is gotten for TERRApy. When it's time to pay, they make payment to TERRApy based on completed milestone. During construction period, you only pay interest. Some of your customers will be greedy. That can they pay interest. But that is when your ingenuity comes in. Because money has value. And there's that value to money. The property you are buying off plan from TERRApy at 60 million. Let me share this with you. As the property they started in Surulere, my son was serving there as a cover. He's a civil engineer. So he was telling at home, I said, I know about the property. Don't bother yourself. Off plan was 55 million, 3 bedrooms. I was talking about 4 months ago, before that statement at Eagle Square was made. You know the statement at Eagle Square? What statement? Subsidy gone. As I speak today, the property is 75 million naira, and it's not even available for people to buy. So if it's taking a loan, construction mortgage, your interest rate is fixed. By the time you look at the cost, the interest you are paying, this and this the administration of the property. Because during inflation, simple economics tells us that the debtor they continue to enjoy, because the interest that have been agreed, that is what they continue to pay. At the end, when the property is ready, all the money they disburse to TERRApy, they will now collapse the money together and now spread it over 10 years for you to pay as a customer. So that is construction mortgage. After construction mortgage, there are other form of financing that you have for real estate. We call it developers finance. There are some developers, they will tell you that look, we allow customers to make payment over 24 months.
There's advantage to that. What happens is that as a realtor, you have to follow up with your customer on a weekly basis. You don't get to a customer a day before the next installment we do and say, okay, I just said I should call you tomorrow, your installment is going to fall due. You don't do business that way. At least from experience, an average milestone take 3 months. Am I correct? Mr. Kola? An average milestone take 3 months. From the day he has paid that first milestone in banking, that's what we call imminent maturity. You start talking to the customer that, look, the next milestone is so amount. Oh, how much have you put together now? So that when that milestone is going to be due, it's going to be an issue. Then you look for another arrangement so that it will not miss that milestone. Because once you meet the milestone, there's possibility that based on the terms of the contract, they can change the price for you, or your allocation can be withdrawn, especially when you have not paid up to 50% of the value of the property. Then, for financing also, there are some of your customers, they bought properties already. Those properties are in their name. Some of them are registered, some of them are not registered. So when you want to sell a new property to them, and they are telling you, Emeka, I don't have cash, and you've given them all the opportunities available with respect to that property, what do you need to do? Your expertise has to come in. That, look, this asset you have, can we call a valuer to value it? By the time they do the valuation of the asset, for the sake of this discussion, let's say it's 100 million. And the property he wants to buy is a property of, let's say, 60 million naira. By the time they do first sales value of that property, I'm sure the bank will be ready and willing to release up to at least 50% of the value of that property. That's 50 million cash. What do I say? If I ask any of you now, if I want to conduct a test and ask you to come out, that tell me the project you have been selling. And I said, can you just give me the futures of the project? When I mean the futures of the project, I made a presentation to Nigerian Custom 2 months ago in Abuja. After the presentation, it was a 5,000 housing unit. After the presentation, this management assistant controller general upward, you know the question they asked me? Somebody said, this room from... But because I have some little idea of the size of a room, the size of a kitchen, and everything. So where we are having the presentation, see, I have to use that to explain to the man that, look, so square meter is from here to here. Though it still insisted that they will prefer something that is bigger. So can you imagine, as a realtor, you want to go and sell a property, and they are asking you, the sitting room is how many square meters? And you are saying, I will get back to you. You've missed it because you don't know what you are selling. As I leave, I want to leave with what I mentioned when I started. Please go and read. It's very, very important. Thank you.
Ladies and gentlemen, that was Mr. Adegbenga Alamu, and I think that he deserves a better round of applause.
Terra developers live the good life.